Right now, there are hundreds of thousands of green card holders and naturalization applicants in this country who are sitting on a financial landmine, and they have absolutely no idea. Not because they did anything malicious, not because they are criminals, but because they have a bank account back home, a savings account their parents opened for them, a fixed deposit they inherited from a grandmother, a provident fund they contributed to for 20 years before they ever set foot in the United States. And in 2026, that oversight, that single unreported foreign account, can result in a $16,536 federal penalty, and it can give a USCIS officer every legal justification they need to deny your citizenship application. I want you to stay with me for the next 12 minutes because what I am about to break down could be the most important financial and immigration compliance information you receive this entire year. My name is Raymond Crivello. I am a senior immigration analyst and consultant, and on this channel, I break down complex immigration and tax compliance developments into clear, fact-based analysis that you can actually understand and act on. Before we go any further, I want to be transparent with you, as I always am. I am not your attorney. Nothing in this video constitutes legal or tax advice. This content is strictly for educational and informational purposes. Your specific situation requires the guidance of a licensed immigration attorney and a qualified tax professional. That said, let's get into this, because the stakes are real, and you deserve to understand them. Let's start at the very beginning, because most people who are at risk right now don't even know the name of the rule they are violating. It is called FBAR, the Foreign Bank Account Report, formally filed as FinCEN Form 114 with the Financial Crimes Enforcement Network, a bureau of the United States Department of the Treasury. The rule itself is not new. It has existed for decades under the Bank Secrecy Act. But what changes every single year, and this is where people get caught, is the penalty amount, which is adjusted for inflation. For the 2026 reporting period, the IRS has adjusted the non-willful penalty to $16,536 per report. Now I want to pause on that phrase, non-willful, because this is critical. A non-willful violation is not intentional fraud. It is not tax evasion. It is simply a failure to file. Perhaps because you didn't know you had to. Perhaps because your accountant didn't ask. Perhaps because nobody told you that a retirement fund in India, a savings account in the Philippines, a joint account in Nigeria, or a pension in Mexico might fall under U.S. federal reporting requirements. And yet, $16,536 per report, per year. Now, here is where the math becomes terrifying. If you failed to file for 5 years, which is extremely common among long-term green card holders, you are potentially looking at $82,780 in non-willful penalties before anyone even considers whether your failure was willful. And if a federal examiner determines your failure was willful, the penalty can reach the greater of $166,000 or 50% of the account balance per year. These are not hypothetical numbers. These are statutory figures rooted in the Bank Secrecy Act and enforced by the Department of the Treasury. But here's where this becomes critical. And I mean critical for anyone who is on a path to naturalization right now. The N-400, the application for naturalization. Page after page of questions about your background, your character, your history. And buried in that application is a question that connects everything I just told you directly to your citizenship eligibility. It asks, and I am paraphrasing the substance, have you ever failed to file a required federal, state, or local tax return? And in a related context, USCIS officers are trained, and this has become increasingly standard practice in 2026, to cross-reference the financial disclosures and tax records that an applicant is expected to provide with what exists in federal databases. Here is the mechanism that most people do not understand. The IRS and USCIS do not operate in completely separate silos. Through what are known as interagency data sharing agreements, and through the legal authority granted under the Immigration and Nationality Act, specifically the provisions relating to good moral character under INA Section 1011F. A USCIS officer conducting a naturalization interview has the discretionary authority to deny your application if the totality of your record suggests a pattern of willful non-compliance with federal financial reporting law. This is not a guaranteed automatic denial. I want to be precise here because this channel is built on accuracy. A FBAR violation alone does not trigger a statutory bar to citizenship the way certain criminal convictions do. But here is the reality of administrative discretion. If a USCIS officer sees that you have significant foreign financial assets, that you failed to report them as required by law, and that you are now applying for the highest immigration benefit available, citizenship, that officer has the legal authority, under the good moral character standard, to exercise discretion and deny your application. And that denial can be extremely difficult to appeal. This is what many naturalization applicants are misunderstanding. They believe that FBAR is purely a tax issue, that it lives in one box, the IRS box, and that immigration lives in a completely separate box. That is not how federal administrative law works in 2026. These systems are talking to each other more than they ever have before. And as data integration between Treasury and DHS has deepened, the likelihood that a gap in your financial reporting history surfaces during a naturalization background check has increased substantially. Let me give you a realistic example so this doesn't feel abstract. Let me tell you about someone I'll call Priya. Priya came to the United States on an H-1B visa in 2014. She adjusted status to a green card in 2018. She has been a model resident. She pays her U.S. taxes every year without fail. She has never had a criminal matter of any kind. She volunteers in her community. She has a U.S. citizen spouse and 2 children born here. In 2025, Priya became eligible to apply for naturalization, and she was thrilled. What Priya did not know, what her accountant never told her, was that the Provident Fund account she maintained in India, which had been accumulating contributions since before she left the country, had at various points exceeded $10,000 in aggregate value. She never touched that money. She never transferred it. She barely thought about it. But she never filed a FBAR. Not for 2018, not for 2019, not for any year through 2024. When Priya's naturalization interview came, the officer reviewed her tax history and flagged a discrepancy between her disclosed foreign income and the existence of the fund that had appeared in a foreign financial institution's FATCA reporting. Because FATCA, the Foreign Account Tax Compliance Act, requires foreign banks to report U.S. account holders to the IRS. The interview was suspended. Priya's case was placed on hold pending further review. Her attorney was able to intervene and file under the Streamlined procedures, which I will explain in a moment. But her naturalization was delayed by 14 months, and she spent thousands of dollars she never anticipated spending, all because of an account she didn't think mattered. There's one detail most people are missing, and it is the detail that catches more people than any other. The $10,000 threshold is not per account. Let me say that again clearly. The filing requirement is not triggered when any single account exceeds $10,000. It is triggered when the aggregate maximum value of all your foreign financial accounts combined exceeds $10,000 at any point during the calendar year. So if you have 3 accounts in 3 different countries and each one individually never exceeds $4,000, but together they peak above $10,000 at any moment during the year, you are required to file. Most people have never been told this. Most basic accountants who do not specialize in international tax compliance have never explained this. And the IRS does not send you a reminder letter. The responsibility to know and comply falls entirely on you as a U.S. person. And who counts as a U.S. person under FBAR rules? U.S. citizens, lawful permanent residents, green card holders, and anyone who meets the substantial presence test under the tax code. This means that if you have been living and working in the United States on certain visa categories for enough years, you may already be considered a U.S. person for federal financial reporting purposes, even if you are not a citizen or permanent resident. What types of accounts must be reported? This is another area where people are regularly surprised. It is not just checking and savings accounts at foreign commercial banks. It includes foreign pension accounts and retirement funds if you have a right to access the funds. It includes foreign life insurance policies with a cash surrender value, policies like LIC in India, for example. It includes foreign mutual funds. It includes foreign brokerage accounts. It includes any account in which you have signature authority, even if the money is not yours. For example, if you are a signatory on a parent's account back home for estate management purposes. If you inherited property or a financial account abroad following the death of a family member, and that account has value exceeding the threshold, your reporting obligation begins from the date of inheritance, regardless of whether you have touched the funds or repatriated a single dollar. Now, and this is the part of the video I need you to pay very close attention to, because there is a way out of this for many people. Let's talk about what you can do if you are in this situation right now. The IRS, through the Treasury Department, has established what are called the Streamlined Filing Compliance Procedures. These are designed specifically for U.S. taxpayers who have failed to report foreign financial assets and foreign income, and who can demonstrate that their failure was non-willful, meaning it was a genuine mistake rooted in ignorance of the law rather than intentional evasion. There are two versions of this program: the Streamlined Domestic Offshore Procedures, which applies to U.S. residents, and the Streamlined Foreign Offshore Procedures, which applies to U.S. persons who lived outside the country during the relevant period. Under the domestic version, you pay a 5% miscellaneous offshore penalty on the highest aggregate balance of your unreported foreign assets. That sounds like a significant number, but compare it to $16,536 per year, potentially stacked across multiple years, and the streamlined procedures represent an extraordinary opportunity to come into compliance at a fraction of the cost of a formal examination. There is also what is called the Delinquent FBAR Submission Procedures, which allows you to file overdue FBARs for prior years without penalty if you have reported all income and paid all applicable taxes, and if the IRS has not already initiated a civil examination or criminal investigation. This is available to people who simply failed to file the FBAR form but whose underlying income was properly reported. And then there is reasonable cause. If you can demonstrate to the IRS that your failure to file was due to reasonable cause and not willful neglect, the $16,536 penalty may be reduced or entirely waived. Reasonable cause arguments require documentation. They require a written explanation. They require the support of a qualified tax attorney or enrolled agent who understands international compliance. But they are available, and they succeed regularly for taxpayers who genuinely did not know about their obligations. The critical factor, and I cannot emphasize this enough, is that you must come into compliance before you file your N-400. Do not submit your naturalization application while your FBAR history is unresolved. If you are planning to file for citizenship in 2026, speak with a tax professional about your foreign financial account history before you do anything else. The sequence matters enormously. Coming into compliance proactively, before USCIS reviews your record, puts you in a fundamentally different legal position than being discovered during the naturalization process. This could affect you even if you believe you have been fully compliant. Here is why. FATCA, the Foreign Account Tax Compliance Act, has created a global network of foreign financial institutions that are contractually and legally required to report U.S. account holders to the IRS. More than 100 countries have signed intergovernmental agreements under FATCA. Your bank in India, in the Philippines, in Mexico, in Nigeria, in the UK, in Germany, with a very high degree of probability, your bank is already reporting your account to the IRS. That information sits in a federal database, and when your naturalization file is assembled, the opportunity for cross-referencing that data exists. This is not speculation. The IRS has publicly stated that FATCA reporting has resulted in identification of thousands of U.S. persons who had not previously disclosed foreign financial accounts. Enforcement actions, civil and criminal, have resulted from FATCA-generated data, and the integration of this data into immigration adjudication processes is an evolving and expanding area of federal administrative coordination. Let me now give you a clear, structured action plan, because information without action is just anxiety. Step 1. Audit your foreign financial accounts today. Make a complete list of every account you hold, have signature authority over, or have a beneficial interest in any country outside the United States. Note the approximate highest balance each account reached during the current and prior tax years. Step 2. Determine your aggregate maximum value. Add up those highest balances. If the combined total exceeded $10,000 at any point during any year since you became a U.S. person for tax purposes, you likely had a FBAR filing obligation for that year. Step 3. Do not file your N-400 until you have spoken with a qualified international tax attorney or enrolled agent. This conversation needs to happen first. Your attorney can assess your exposure, determine which compliance program is appropriate for your situation, and help you file overdue FBARs in a way that positions you favorably before USCIS. Step 4. If you are already in the naturalization process, do not attempt to resolve a FBAR compliance issue on your own. Consult with both an immigration attorney and a tax professional simultaneously. These two areas of law are intersecting in your case, and you need representation in both. Step 5. Document everything. If you are filing under reasonable cause or under a streamlined procedure, the quality of your documentation, bank statements, records showing you were unaware of the requirement, records showing you had no tax liability on the foreign income, will directly affect the outcome. Before I close, I want to zoom out for just a moment because I think it is important to understand why this matters beyond the dollar figures. Immigration status is not just a legal category. For most of the people watching this channel, it represents something deeply human. It represents the product of years of sacrifice, of distance from family, of learning a new language, adapting to a new culture, building a career, raising children, contributing to communities. The path to U.S. citizenship is one of the most significant journeys a person can undertake, and the idea that an administrative compliance failure, a form that nobody told you that you had to file, could place that journey at risk is genuinely serious. I am not telling you this to frighten you into paralysis. I am telling you this because you deserve to know. Because knowledge is the difference between a problem that is resolved before it becomes a crisis and a crisis that could have been avoided entirely. The enforcement environment in 2026 is real. The interagency data sharing is real. The FBAR penalty adjustment is real. And the good moral character standard in naturalization adjudication is real. But so are the solutions. The streamlined procedures are real. Reasonable cause is real. Qualified professionals who handle exactly these situations every day are real. You are not without options, but you must act before your situation forces the government's hand. If you want accurate, fast, and reliable immigration updates, subscribe to Raymond Crivello right now and turn on notifications. Immigration policy is changing rapidly, and staying informed is no longer optional. It is essential. If this video gave you clarity, please like it. It helps this information reach the people who need it most. Share it with a friend, a family member, or a colleague who holds foreign financial accounts and may not know about these obligations. And leave a comment below telling me your visa category or where you are in your immigration journey. I read every comment and I use your questions to shape future videos. This has been Raymond Crivello. Stay informed, stay compliant, and protect everything you have worked for.